We have with us Arundhati Bhattacharya, the first woman chairperson in the 210-year history of the State Bank of India. Welcome to the show, Arundhati. At the risk of sounding like an apologist for a man who's made the phrase willful defaulter part of our everyday lexicon, let me start by asking you, have we gone a bit overboard over the Kingfisher issue? With the result that what started off as a loan recovery by banks has now seen agencies like the Enforcement Directorate, the tax authorities getting into the act, and in the process, the recovery process itself has got sidetracked and the chances of recovery have receded rather than improved.
I actually think, that if there is coordination between all agencies, then probably recovery can happen faster. However, having said that, each of these agencies have their own priority, and that is something, unless we bring that in sync, then recovery might be losing the priority, and that I wouldn't like. However, if recovery remains the priority of all three agencies, then probably it can be speeded up and it need not actually sort of fall by the way, so to speak.
But the fact is that when banks are in the business of lending and taking risks, so how much flexibility do banks really, especially public sector banks, have in the matter of, say, compromise settlements? In the case of Kingfisher Airlines again, for instance, will public sector banks have the courage to accept a haircut, knowing full well that they could be subjected to all kinds of inquisitions by the CBC, the CBI, etc. much later? And in this context, what is your reaction to the idea of a government-appointed pricing committee to fix the price or the haircut that banks can accept that the government is reportedly toying with? Is it a remedy that is worse than the disease, a bureaucratic solution in lieu of a commercial one with all the attendant drawbacks?
Actually, I think the idea that the government had was to have a committee that would not fix the price, but that would vet the process to say that the process that has been followed is in order. Because it's difficult, to have a committee that's going to look at so many accounts that might be coming up for compromise settlements and then give an opinion on each of them. I don't really think that there are too many experts with sufficient amount of time to do that job. However, as I said, the idea was that public sector also has the ability to do compromises, but it is subject to a process. And that process could possibly be vetted by a committee to ensure that the process is transparent and fair, and it has been applied in the same manner for various accounts. As you know very well, we have been doing compromises for a very long period of time. It's part of the cycle of lending and recovery. But there are certain boundary parameters under which we do certain compromise. The boundary parameters, of course, are that there should not be any fraud in that particular account. Secondly, we also must understand what is it that caused this particular account to go down. And then if there is indeed difficulty in carrying on this account on account of the economy, bad management, bad luck, or whatever you have it, then you have got to assess what are the capacity of that particular borrower to repay. The repaying capacity is very important over here, because that determines how much of a haircut we should take or we can take. If the borrower has very large repaying capacity, then there is really no need to take a haircut. If the borrower does not have the repaying capacity, or the securities that have been pledged to the banks, they have lost value, in that case it makes sense to take a haircut, take whatever we can recover, and to move on. Because as you can understand, there is a discounted value of cash also. There is a net present value of cash. All that is required in such cases is a proper understanding of, as I said, what are the boundary conditions, and thereafter an application to the particular case itself, and proper documentation of the rationale as to why you are doing the compromise and what is it that you are accepting and how much is it that you are accepting based on what parameters. If that is done, it is possible for the public sector also to do it. It's a little bit of a long drawn procedure, but it can be done.
But isn't this a judgment that is best left to the public sector banks themselves? After all, the bank boards are competent, you have joint lenders forum. So what makes a pricing committee any more competent than the bank boards themselves or the joint lenders forum?
No, I don't think, as I said, that the idea was for a pricing committee. The idea was for the committee only to look at the process and to confirm that yes, the process has been properly followed. It was not for giving a pricing, it was not for determining what should be the haircut, it was not for determining the compromise amount. I do not know where is this idea coming regarding a pricing committee. If there is one such, I am not too well aware of it. But I do know that the idea was mooted for a committee that would ensure that the job being done by the public sector is as per the given norms, as per the processes laid down.
So you don't think that that would be interference, because even the process of surely public sector banks are competent to decide what is the due process.
Actually, the fact of the matter is that the public sector banks also probably were looking for some comfort that a third party is looking at the processes being followed, so that at a subsequent date they don't get questioned and they don't get harassed. So it was not something that was only coming from the government side, it was probably also coming from the bankers' side.
But that brings us to the crux of the problem, that today public sector bankers have been reduced to a state that they're constantly looking over their shoulder before they take a decision. Now, can proper lending ever be done in an environment like that?
It is difficult. It is obviously difficult because you're always trying to second guess a decision. And as you know very well, hindsight is always 20/20. When you take a decision, certain things appear in a certain light. When you revisit that decision subsequently on account of things that may have happened in the interim, it appears that the decision was not really very well thought out. So if that is the case, and because hindsight is always 20/20, you constantly second guess decisions, and obviously that causes a kind of delay, it causes paralysis, it does cause issues. And I think this is normal whenever there is a spike in the NPA cycle. And that is also something that we anticipate is happening and will happen for at least some time going forward.
Okay, because that really is a problem, that today the public holds public sector banks, especially banks, large banks like State Bank of India, for a great deal of responsibility for the high level of NPAs. In fact, to come back to the issue of Kingfisher, there seems to have been, in hindsight once again, little justification for the decision to restructure loans to Kingfisher after the troubles had become apparent. Of course, this was approved by Reserve Bank of India, or even the decision to lend against a Kingfisher brand. And Kingfisher is only the best known example of banks supposedly extending kid glove treatment to large and powerful borrowers. So how valid is the charge that public sector banks either failed to take action in time or worse, were hand in glove with promoters?
No, I don't think it's a valid assumption at all. You must understand that when money is lent to a business, the banks will try their level best to see that the business keeps running, because only then the money is going to come back. And I think this applies not only to public but also to private sector bankers. I do not know why the public sector get sort of singled out for this kind of attention. Fact of the matter is that public sector banks still have 70% of the economy. Where infrastructure lending was concerned, part of the private sector didn't do much lending there, but some part did, and their difficulties are also quite apparent today. Of course, they are more nimble while resolving of accounts, and maybe we don't have that nimbleness because, as I just told you, we have to follow a very well documented process. But having said that, it is a fact that whenever troubles emanate, it is very easy to just pull the plug and put an end to the account. But that's not the way things happen, because people expect that things will turn around, and temporary measures, if they are taken and if liquidity is provided, then the account will pull out of the issue. And there are several such accounts which I can quote to you, which have indeed pulled out of these issues. You can look at today, for instance, there are instances like, say, Haldia, which has turned around, Suzlon, which is showing much better numbers, Jindal Stainless, which again is showing much better numbers. So I could go on. There are dozens of these accounts where indeed we have provided handholding and they have turned around. So the fact of the matter remains that, whenever there is any stress, if you keep pulling the plug, then there would be very few accounts left. Now, once you have supported such an account and that account doesn't do well and it indeed does go down, then all the questioning starts. And that is where the problem is, because again, you are looking at a decision with hindsight, and you do not really have the understanding of the situation at which point of time this decision was taken.
And it's hardly a secret that public sector bank chairmen function under a number of constraints, many of which arise from their public ownership. So they're compelled to, say, give loans to infrastructure projects, state electricity boards, open Jan Dhan Yojana accounts on a much larger scale, all of this might be contributing to nation building, but when the chickens come home to roost, as in market valuations, public perception, they get no credit for all this. Given this kind of state of affairs, have you ever been a bit envious of, say, a Chanda Kochar or a Shikha Sharma? Remember, ICICI Bank was able to offload its exposure in the case of Kingfisher to SRI, whereas you could not do it.
Well, as I said, we do have our difficulties. Having said that, I still believe that one of the reasons why we still have 70% of the economy is because of the fact that this country is a developing country. And in spite of the brickbats that we continue to get, I still believe we have a developmental role. End of the day, if all of us were only doing home loans, how would this country develop? End of the day, again, if all of us were not willing to look at any risk, then would there be any way that we would develop from an agrarian nation to a developed nation? So I think, we have to sort of, balance the whole thing and say that yes, there is a need to do these kinds of loans to support infrastructure, to support core sector. When there is a downturn, there will be issues. We need to be balanced about those issues. We need to understand what went wrong and maybe draw a number of lessons. But having said that, again, I still believe that we are a developing nation. There is a need in such a nation to be able to support various segments of the economy, whether it be PMJDY or whether it be the Stand Up India or the Skill India, the initiatives that have been taken. We are very much part of that. As you know, even something like the Skill India program. State Bank of India alone runs 117 rural training centers. The people that we have trained there is in excess of 2,50,000, and our placement record is quite good, with 49% people settled in either a business or in a job out of all those who have been trained in these rural institutes of ours. So we take all of this quite seriously as well. I think it's inevitable that we do get brickbats, but having said that, I don't believe that our role should materially change just because of negative public opinion for a particular period of time.
Oh, absolutely. Particularly in the role of infrastructure financing, I know State Bank of India has done a great job. But you've recently gone on record to say that conditions are coming together that are likely to help resolve this NPA issue. What makes you so hopeful? Because quite frankly, I don't see a change in any of the circumstances that led to the rise of NPAs in the first place. The growth slowdown continues, cost and time overrun in large projects is inevitable, excess capacity is there, judicial delays are there, the structure of bank ownership that results in the inability of PSBs to take quick action without, fearing the CVC, CBI, all these things remain. So what makes you so hopeful that the NPA issue is going to be resolved soon?
See, there are several things which I believe have actually happened. If you look at the projects, the way they are getting conceived now, I think they are getting conceived in much better manner. There has been a lot of pushback from us, for instance, that we will not fund any road project unless they come with 100% approvals and minimum 80% contiguous land. Just last week, we had one road project that was offered to us where 100% land is already acquired. Now this is not something that we would have seen 5-6 years back. Coming with 100% land, unheard of. Similarly, if you look at some of the other things that are happening, there too we are finding that the government is very serious about ensuring that when they bring something on the table, that it is complete in as much as possible. For instance, the Uday scheme that was launched by the Ministry of Power. Now that not only ensured that much of the debt got moved out of the DISCOMs, but it has a very strong review mechanism. And I am told that every quarter, each of the state power ministers actually go and review their position with the center. So it has with it, the responsibility given to the state that they must get ahead with the work for bifurcation of the rural feeder, so that, the subsidized electricity can be properly bifurcated. They are also supposed to do a lot of work on smart metering. Money for this is also being made available by the government from multilateral loans that they are getting out of ADB and World Bank and others. Similarly, there are very many other parameters which they are reviewing, because they are very serious about their goal of ensuring power for everybody 24/7 by 365 within a particular period of time. Now, if only Uday is done and let go, then obviously these things will not happen. So the ministry, however, is keeping track of everything that is happening subsequent to it. So we are seeing this in ministry after ministry actually.
But another effort is that the bankruptcy law, so much has been made about it, but it's yet to be passed by the Rajya Sabha. Even assuming that it is passed, are we being a little unrealistic in seeing it as some kind of a magic wand in the speedy resolution of NPAs? After all, time limits were laid down under the DRT, the SBI Act, and it didn't really help matters. Does it mean that the only effective remedy for NPAs really lies in addressing the entire ecosystem rather than just one part of it, recovery by banks?
I fully agree with you, and I do not think the Bankruptcy Act is going to be a magic wand, not only because it's only one law, but also because the mechanism for implementing it, that itself is currently not available in the country. You need bankruptcy professionals, professionals who will actually work on this, who will hold the asset during that period. So all of those professionals are currently not available in the country. So it will take about say maybe 24 to 36 months for it to be properly functioning in the country. But we are optimistic in view of the fact that it is definitely a step in the right direction. The second thing why we feel optimistic is that not only the bankruptcy, but several amendments on the SARFAESI and DRT is also about to be introduced in the parliament. It should be introduced any day now, because I am told that the amendments, the document is already ready. So even those will actually tighten up the working of the DRTs as well as the SARFAESI. And wherever there are lacuna that have been pointed out by us, and there are very many suggestions we have given to the government has assured us that they have taken these suggestions on board and they have tried to make the working of these two much better. So that is again another step in the right direction, we feel. And there I think they have also started, or rather mooted, the use of a lot more technology than is currently being used by the judicial system. So the original idea was that even for say a DRT hearing, the plaints and the submissions could all be online, with only 2 hearings allowed at the end of all of the submissions, so that the whole thing could be brought to an end in a very short space of time. So I think we are definitely looking at proceeding in the right direction. But more than that, I think what makes me feel optimistic is that the messaging is very clear. Earlier the messaging was that you could get away with it. Today the messaging is very clear that you can't. That it is important for us, all of us, to recognize if there are stresses coming, and then for all of us to jointly work in resolving that, rather than trying all kinds of means in order to delay the inevitable.
How hopeful are you once again about the Bank Boards Bureau? Will it really improve corporate governance in public sector banks in a scenario where government continues to hold more than 50%, 51%? At the same time, the bank boards has been pushing for merger of the SBI associates. Is this the time, and how open are you to that idea?
Of course, I know each of the individuals separately, and all of them are very good professionals. They obviously have the best interest of the banking sector in mind, and frankly speaking, I think they will move and they will push for the right things. How far the government will be able to do everything that they want, today it's very difficult for me to say, but definitely again a step in the right direction, and at least today the willingness to do things differently appears to be very much there. And as long as it has to start somewhere, and if it has started in this manner, then we should welcome it.
Arundhati, the RBI's asset quality review in January this year was perhaps the single biggest factor responsible for the very sharp increase in provisioning and in the resultant adverse impact on bank bottom lines. But the RBI does a regular inspection of banks, and presumably you're satisfied with the provisioning done earlier. So what, to your mind, could possibly explain the RBI's sudden insistence on higher provisioning? And did you take up the matter with the Reserve Bank of India? Was there any disagreement at all?
What RBI was trying to do is trying to determine which were the weak accounts, and then try to see that the banks are prepared enough if any of these weak accounts really go down. I think that was the idea. Also probably they were trying to ensure that the banks have enough provisions just in case we have a conducive situation where the accounts could actually be sold down, or transferred to some other body. Now all of these would obviously mean some kind of discount, some kind of haircuts, and if you have sufficient provision, then you are obviously enabled to do this quickly. As you know, RBI had said that by March 2017 they'd like to see the bank's books to be totally clean. Now if they are going to do that, they would need to move very, very fast. We ourselves felt that it was not really important to do all of this in the first 2 quarters, mainly because we felt that we were beginning to see some amount of turnaround in the economy, some amount of demand going up, and as you know, many of these accounts are working units. In respect of working units, as the demand goes up, obviously there is a chance that they will be able to have better cash flows, both top line and bottom line, and therefore their ability to withstand the stress will increase. However, sadly, what was instead felt, what was felt was necessary was that we needed to do it immediately, and thereafter maybe in the next 4 quarters ensure that if they come back, well, good for us. If they don't, we'd still have the ability to withstand any stress that could come our way.
You spoke about, in fact, the March 2017 deadline.
Yeah.
And in hindsight, has that deadline been a little unrealistic, given that it's a very short period of time for banks to clean up their balance sheets? And in the process, does it really leave banks with only one of two consequences? They'll either have to shrink their balance sheets, or they'll have to find additional capital. And that's going to be very difficult. So what, for instance, is State Bank of India's own plan of action?
At this point, I don't really need to raise capital. I have sufficient capital. And again, if the growth is in the range of 14%, which is what we are envisaging, I don't think capital will be required. I will not need capital. But having said that, there are many other public sector banks. They may need to look at capital. One good thing is that, growth has not come back fully as yet. And therefore, if you've seen the credit growth of last year, it's in the range of 11.5–12%. We expect this year to be a little better, but it will not go to the extent of 18–19%. So to that extent, we still have time in order to get our act in order.
Should bank lending lead recovery, or should recovery lead bank lending? Because after all, unless banks lend, you're not going to see recovery.
It could be either way. It will depend upon what is the kind of recovery, what is the nature of the recovery. For instance, in India, a lot of people were worried that the retail book would start showing stress because the corporate book went down, and obviously, the retail book is next in line. However, luckily for all of us, the retail book has not shown that kind of stress, meaning that whatever downturn was there, it didn't result in a lot of job losses, mainly because the downturn was in respect of units that had still not become fully functional. Had they been fully functional units, obviously job losses would have been greater. Now that is one reason why your retail continued to do well. The second reason is India is mainly a service economy, and service economy bit was not impacted by this downturn. Again, they continued to create jobs, as a result of which again the retail continued to do well. But of course, if you are looking at recovery being done through large projects, then yes, credit is a prior requirement, because obviously none of these large projects can be taken up without any credit being given.
Later this year, we're going to see two major changes. The RBI governor's term comes to an end early September, and your term as SBI chairperson also comes to an end a little later in October. And while there's a lot of speculation about the RBI governor, there's very little talk really about your own term. So can I ask you the same question that people have been asking Rajan? Would you be open to an extension, or maybe to taking over, say, as the RBI governor? After all, it wouldn't be a first. Of the 23 RBI governors we've had to date, 4, including the first, Osborne Smith, were from the State Bank of India.
That's right. That was there when bureaucrats were actually heading the State Bank. All of the bureaucrats would come into SBI, get trained in banking, and then go on to RBI. But I think I'll take refuge in what Dr. Rajan himself has said, that let the question be asked and then we'll give the answer.
In a scenario where few bank chairmen really speak their mind, especially when it comes to any kind of, a different point of view from either the Reserve Bank of India or the government, you have not hesitated to speak your mind, whether on issues like the RBI's insistence on banks shifting to the marginal cost lending rates, or questioning the viability of payments bank model, or calling for a clearer roadmap for recapitalization with provision for government to reduce its stake below 51%. While I'd like to believe that the state talk comes from being a woman, you're not the first woman to head a public sector bank. So what is it about Arundhati Bhattacharya that makes you speak up when others opt to remain silent?
Very difficult for me to say. I can only tell you that what I speak, I try to say it with everybody's well-being in mind. There are no personal agenda in this whatsoever. I do believe, that it is important for us to become more nimble, because today the challenges that we face are humongous. And we need that nimbleness, we need that ability to act quickly, we need to be able to be decisive in order to ensure that we do the best job for the bank. Obviously, we have a huge atmosphere of mistrust and suspicion. I think we need to, at some point of time, get a little beyond that to try and see that, we are making our best efforts in order to do a very difficult job. And then, empower the people who are doing that to take the best decision possible.
It's only when people speak up and expect a different point of view that people perhaps stop and think before they proceed in a certain line. Thank you so much, Arundhati. It's been great talking with you.
Thank you.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.